Hi everyone and welcome to Inderes TV. Today we're going to talk about Scanfil with Antti Viljakainen. The Q4, we saw some polarized growth there again.
Yes, we did.
Yeah, so it continued to grow in energy and clean tech and connectivity, and in the other segments, not so much. So are you worried about this, and what's it about?
Not really. This slowing growth was so very well expected. Scanfil had quite strong comparison figures from Q4 22.
Yeah,
and it was really well expected that the growth cannot continue the pace it had in some quarters before, and also growth has been also some time a bit polarized between segments, but I do not see this a major threat for the company. Of course, Scanfil's business is investment driven, and higher interest rates are cutting some demand from investment side, which is more or less normal economic cycle.
Okay, and recently the company also had a CMD. What would be the topics from that one?
Of course, Scanfil updated its financial targets and also increased a bit margin target from 7% EBIT to 7 to 8%.
And what's your comment on that? Do you think?
I expected the increase.
Yeah.
Scanfil has almost reached the original target, and several companies in the peer group have also exceeded that level of 7%, are targeting even higher. So also expected that Scanfil
they will deliver on that one.
They must raise bar as well to stay in line with the
others.
Competition. They gave also a new target for the balance sheet. It's like 1.5 maximum net debt EBITDA ratio, which is in line how I think that Scanfil will use and should use its balance sheet. On the growth side, they also updated the target to 10% annual growth. The original target was 5 to 7. That old target was 5 to 7% organic growth.
Now it's 10 organically.
No, it's 10 including organic and organic growth. So they raised the bar a bit, but also included acquisitions.
Yeah. And that's a bit higher than the market as a whole.
Yes, it is, but of course it includes also acquisitions, so they are not really comparable. I also, as a key takeaway, I got a feeling that Scanfil will give a bit more weight on inorganic growth in near future, which is also quite a natural conclusion, as economic outlook in the world is like a bit weaker for the next few years after this strong growth, and Scanfil has also been growing very fast organically, so it might be a good time to take a different approach. Also, valuations have got a bit lower on the M&A market, so it should be a bit easier to find good deals.
Yeah, opens up for possibilities on that end. So people have been discussing this as well. What about, there have been a lot of everything is
proportional.
Yeah, hard to find the right term, but selling among insiders in the company, is this something that you're worried about, or how do you see this?
I'm not very worried about that. There have been over the years several points where insiders have been selling, and at least historically it has not been the best option to follow insiders. The sales have come from the management team members mostly, while board members and big shareholders have kept their shares. People may have very different reasons why they want to sell shares in the companies, and I don't see that these sales are something that we should be very worried about at this point, at least.
Mm-hmm. So what is our own recommendation at the moment?
Our recommendation is still after Q4 and CMD accumulate with the €9 per share target price. We basically made no estimate changes after these two events, and kept the target price intact. Scanfil is still valued with very reasonable multiples below their 5-year medians. EV/EBIT is single digit, and PE something like 11-12, which I consider low for Scanfil. ECF method also suggests a decent upside in share price, so all valuation metrics are still green, and expected return is higher than return requirement.
Perfect. Let's end there. And if you want to know more about the company, read the report down below. Thank you.